Hello everyone and welcome back to one more video. Today I would like to discuss something that is very important for our trading strategies, which is backtesting. So far we presented different strategies and we were relying only on statistical counts to check whether our model's estimations are reliable for trading. Backtesting our strategy brings one additional information, that is the amount of profit that you are going to make within a certain time. This profit percentage is important to define if you are thinking of any kind of investment in your strategy. So before I continue, as usual, the code is a Jupyter Python notebook that you can download from the link in the description of this video. And this topic was proposed by one of your messages, so thank you again for sharing your thoughts, getting really interesting ideas from your feedback. And I do apologize if I didn't have the time to discuss all the proposed ideas, but I'm keeping a list and I think we are going to make it. Now for backtesting tools, there are many available libraries online. I'm not really aware of all of them because I honestly prefer to code my own functions. This way I know exactly what is happening inside of my code, especially when it comes to backtesting. We need something really solid. However, among the proposed packages, I had two choices. Either by using the package called Vector.bt, which I found a bit difficult to learn in the sense that you can't really learn it within a couple of hours and start using it for your own strategies. The problem I faced was that documentation was kind of scarce in my opinion, and many details I had to dig for through forums and online examples. That being said, it has a huge potential. It's a good package with a lot of options. However, I wasn't willing to spend a month to get familiar with the needed functions just for the sake of testing one simple strategy. For this video, I went for the second choice. The package is called Backtesting.py, which in my opinion offered a simpler approach. Okay, so let's jump into it and see how much money our strategy would have made. For this example, I'm going to test a previous strategy. So I took exactly the file of the previous video on this resistance and support automated detection and candles patterns detection. So these are two indicators that are combined together that we are going to use in this video. So I'll skip the parts that were explained previously. So this is where we are loading the data and cleaning the data. Then we have the support and resistance functions detection. So if this is your first time watching on this channel, I think it might be good to go back and check the previous videos, how to detect support and resistance functions, and also the one where we are explaining how to detect engulfing patterns and shooting stars and hanging man, all those long tail rejection patterns of the candlesticks. And here we are going to compute our signal. Is it a buying signal or a selling signal, or maybe no signal at all for the moment? So we are going to consider a buying signal if we are approaching support level, and then we have a rejection candlesticks pattern that is happening right next to the support level. Or the opposite is also true. We are going to consider a selling signal if we are approaching a resistance level and we have a rejection pattern from the candlesticks showing next to the resistance level. So we labeled both our signals and we are going to fill one column in our data frame later on. I will have to run this cell and run this one. And then I'm simply going to count how many signals did I get just to check if my functions are working properly. So I'm getting 98 selling signals, and we can also check for the buying signals at this point. We have 87. Remember that here I considered data for around 18 years, I think. So it's since 2003 up to 2021. And at this point, I have to change the titles of my columns so they can fit with something that is compatible with the Backtesting.py package that we are using. It's case sensitive, so we have to respect also the cases and the names of the columns. And here I'm changing the names of the columns so they can be recognized, but also I'm selecting a series of rows. First of all, let's check for all the rows together, and then we are going to apply some selections later on. So in brief, my data frame contains the following. We have the time, we have the opening, high, low, and closing price. We have the volume that we are not going to use for the moment. And we have our signal that we have just computed before. And I'm going to define a signal function that simply returns the signal that we have computed, this series or this column of my data frame. This is going to be needed later on when we are going to define our class regarding the strategy we are going to use. So now we reached the most interesting part, which is defining our strategy and backtesting it. I've kept some comments from the website and the documentation of Backtesting.py because I find these very important to keep in mind just when we are building our class. So they are saying that a new strategy needs to extend strategy class and override its two abstract methods, init and next. So these are the two functions we are going to override to build our strategy. The method init, I think, is something to initialize the first variables or the first functions at the beginning of the strategy when you first call the class. So it is invoked before the strategy is run. Ideally, it is used to pre-compute whatever indicators and signals the strategy depends on. So anything that needs to be computed, you have to do it within this init function. It's run only one time at the beginning of the class. Now the next method is called next. It's then iteratively called by the backtest instance. So this is important. This is where actually you are going to call the signal and apply actions like selling and buying positions to the market. The backtesting.py cannot make decisions and trades within candlesticks. So it's either executed, or orders are either executed at the closing price or at the opening price of a candlestick. This is very important to know. So any new orders are executed on the next candle's open price, which is the current candle's closing price. If you are using, for example, a 4-hour candlestick charts or daily candlestick charts, and you need something more fine, I mean, you need to execute orders at specific times of the day, we can simply use hourly data, for example, and this backtesting.py still would work in this case. Okay, so let's see how to code this. I'm going to import strategy, and this one, the crossover, it was an example on a crossover of slow versus fast moving averages. And this was their signals of buying and selling or closing the positions. So I'm going to remove it for now. And then I'm going to define a new class. I'm calling this class myCandlesStrategy, strat, and it's going to take as a parameter the strategy that we have just imported. And the first thing, I'm going to define the init function just like they've advised. And inside of this, I'm going to call a dummy function. I don't know what it is. I don't know what it does. It was simply recommended to put it there. It probably does nothing in our case, but I'm just keeping it here. And then I'm calling self.signal1, like some kind of variable that is a member of the class that will be equal to self.I. I is a function to define indicators inside of this strategy. So I'm overloading this function, I, and I'm feeding it with the signal function. The signal function will bring the calculated signal from our data frame, and now it's going to be, the data is going to be a part of our class. So our class, our strategy class, is now aware of this indicator called signal from my data frame. So this is the easiest way to use this. This is the most simple approach I could find, and the fastest way you could learn this for the first time. Just define whatever you want using normal Python, the classic Python functions and examples, and put everything in one column, or even more if you have more than one signal. Just put them in columns in your data frame, define functions that would return the values of these columns, and then inject these as indicators inside of your class. You might have 2 or 3 or 4 indicators, as many as you wish, as long as you respect this approach or this notation here. So remember, using the I function is very important. This way, for each candle that is being considered, the signal is going to be that exact value that is specific for this candle. If you don't put the I function here, you put simply signal, you are going to inject all the data at the same time. You are going to have a series, an array. And while the indicator function here is going to choose one value that is specific for the currently treated candle. So this is very important, just to choose one value that concerns the candle that we are currently reading. Then we are defining another function, which is the next function from our class. And again, I'm going to put super.next. I have no idea what it does. They simply advised we put it. and it doesn't change much in our case here. So if the signal is 2 for the current candle, we are going to define stop loss values and take profit values. And this is going to be the current closing price of the current candle minus 750 exponent minus 4. Remember, in our data, we have 0.5 digits information, 0.5 digits data, and we need to multiply these times minus 5 or minus 4 to take this into account. So here, 750 exponent minus 4, meaning we are considering 750 pips of difference between the current closing price and the stop loss. Then the take profit is something that is positive because remember we are buying here, it's the buying signal. So I'm putting plus 600. Why did I take 750 and 600? It's completely random. Actually, I chose those and I was trying which of these two values is going to give me something that is good, a good result, a good income. And then when this is set, we can execute our buying position, providing the stop loss value and the take profit value. I think you have other options like changing the size of the order or other stuff, or trailing stop, for example. I didn't dig into all the details, honestly, because I just learned this, but I find this very interesting for the moment, just to keep it simple and test our strategy. Then if this signal is a selling signal, I'm going to define a new stop loss and a new take profit values, and then I'm going to pass the order of a selling position using the stop loss and take profit values here as parameters. Okay, so let's run this. So we have our class. Okay, it's going to take some time. We have some warnings. Then from backtesting, I'm importing something called backtest. And I'm defining a new variable, backtest, which is equal to this function, backtest, that will take the data frame as a parameter. It will take my class, my strategy class, the initial cash in my pocket, in my account, and then a percentage or a value of the commission. These parameters actually you can change like you wish to test your strategy. These also, the take profit and stop loss, they are dependent on your strategy. You might as well put something else. You might as well put, for example, the average true range here as a column inside of our data frame, the ATR, or anything else, the RSI, whatever, using Pandas TA, just like we have shown in previous videos, and put those to use inside of the class, inside of your strategy. It's very easy to backtest now. We can simply run this cell. I already did. You can see this. Okay, we have a small error. I didn't run the function signal, so I have to run this, and then let's run this one. And these are our results. We are going to run the backtest variable and then check the stats, the statistics of our trading strategy. So these are the parameters. We have the starting candle, its index is 0. The ending candle, its index is 4,733. This is the total number of days. I'm using the daily charts, and this is the total number of candles that I have in my data frame. Then the duration is the same. So I'm not using the dates really. I'm using the indexes here. You could use the dates, but I didn't. And then we have the percentage of the exposure, 82%. The equity final is $18,000, almost $19,000. The peak, the maximum peak of the equity is $20,000. Remember that we started with $10,000 cash. So this is actually a profitable strategy. If you want to know more details about the strategy, you can check the previous video on this particular strategy where we are using the candlesticks combined with support and resistance levels detection. 89% in return in total. Then we have buy and hold return. I mean, if you would buy and hold, you would get 5% during this period of time. Then it also provides you with the maximum drawdown percentage, minus 20%, and the average drawdown percentage, which is minus 2%, 1.8. The maximum drawdown duration is 927 days. This is huge. This is not good. Then the average drawdown duration is 36 days. It's okay. It's around 1 month. You are losing for a month. It's all right. You will make it up for the next month. The number of trades, 184 in total. And if you divide these by the data duration, which is almost 18 years, I think you get like 10 trades per year, so it's not much. But remember, you can run this strategy on different currencies. You don't have to run it only on euro versus US dollar. You can run it on 3 or 5 currencies in parallel, and you will get 5 times as much of these trades. The winning rate, actually, this is interesting. We are winning 55% of the times. So we have a 5% advantage on the market. And the best trade percentage is 5.4%. This is the maximum profit you would have made within one trade. The worst trade is minus 6.6%. And the average trade percentage is 0.37, 38%. So this is okay, I guess. You are making 0.38% per trade. Maximum trade duration, 180 days. This is too much. I don't think if you can wait for a trade to be opened for 3 to 4 months or half a year. However, the average trade duration is 21 days. It's okay. So we are closing the trade within 1 month of the date we opened it. And we have some other data that I didn't have the time to look into. Anyway, so you can see that this is a good strategy. We've backtested our strategy fairly easily. We didn't spend much time on doing this. So I think you can now use this file to propose your own strategies and apply your own modifications upon. We can, for example, go back to our back candles testing, change the number of days that we are considering to check the support and resistance levels, run this again. So now we are considering only 30 days from the candle backward to check the support and resistance levels. And we are going to see what results we are going to have. So we have $20,000, $750 on top of $10,000. I think this is better. As you can see, we have 107.5% of return. We can still continue to change some other parameters regarding the strategy right here. I mean, if it is an engulfing pattern or is it a star or whatever, you might apply any changes to the parameters to fine tune this strategy and have something decent at the end. And interestingly, if you take some slices of the data, like for some period of time, here I took 1000 days, it will also give you positive results. Like you'll always have something in return, like here we have 47%. Now, if you take small slices, like 100 days, for example, you might fall on a negative result. Let's, for example, try between day 100 and day 200. Now we have 3.5% in return during those 100 days. Some periods, like for 2-3 months or even for 6 months, the algorithm or the model will not always give you a positive return. But overall, if you take a year or 2 or 3 years, you will always get a positive result. There is one frustrating part I didn't succeed to run, which is Backtesting.plot. So we were supposed to have something visual to assess our strategy, like a candlesticks with points where we had buying positions, selling positions, and where those positions were closed. But it seems that my installation is missing something. I'm getting this message, so it's not going to work, and I honestly didn't spend much time on it. I simply wanted to advise you, if you are going to use this, expect some problems, probably, if you are trying to plot these using the library of backtesting. Maybe in the future, if I spend a bit more time on it, I will share with you how to make it work. And just so you know what we are expecting here, I was expecting something like this, like the equity, to see how it is climbing through the time. The trades, you have profit and loss of each trade, and the positions on the candlestick chart. Where did you have a trade? Where was it opened and where was it closed? Now, regarding this strategy, it's true that it's a winning strategy. I mean, it's nice to have it, to have proven that this method works to beat the market somehow. However, we shouldn't forget that the data is running from 2003 up to 2021. So we are talking about around 18 years. And if you are trying to make 100% over 18 years, it might not be as much. And this you might want to consider before you jump into this strategy trading. So 107% divided by 18, it's around 6% profit per year. It's not bad, but it's not going to make you rich overnight either. And a lot of people and friends always ask me why algorithmic traders are not super rich and they don't all have supercars. Well, this is the answer right here. Usually a good algorithmic trading strategy would make you around 5% per year. So it's enough to pay your tickets to have a vacation or holidays, but it's not enough for a supercar. I think with more research, we could stretch this up to 10%, maybe 15%, but I wouldn't expect more than 15% per year using an automated trading bot. Honestly, out of experience, maybe others have different experiences. Maybe they have more positive results. You might want to run this strategy on the 4-hour charts instead of the daily charts. This way you will get more trading signals. So you will have probably more trades to do. I don't know if it's going to be a positive or a negative thing. What is the effect on the results? I will leave it up to you. Just take it and have fun tuning the code and enjoy your trading. So again, I would like to thank all of you for the comments, the messages, and the ideas. I hope that the content is helpful for you. If so, stay tuned for more and see you next time.